You guys all caught me mid sip of my coffee. Happy Friday. Yeah, TGIF. We made it. We're here. Obviously, a massive, I shouldn't say massive, big, big down day in the markets. Hopefully, you can all hear me. Welcome. Just over the last couple minutes, we saw the markets. Yeah, sip for sip. There you go, Jake. We saw the market sell off. S&P's about 20 points or so. And there's a headline. I actually just posted it up in the Vol room. There's a headline that just came out that says that President Trump has ordered 2 nuclear submarines to be positioned in appropriate regions near Russia. Nobody likes to hear that. I'm sure that is why just over the last few minutes we saw big downward move in the markets, about 20 points or so, and we'll have to see where we go from here. But beginning of the week, we said this was a massive week, and it has been. It has not disappointed in that regard. Between Meta, Microsoft, which knocked the doors off their earnings, and then Amazon, Apple yesterday. Apple's was pretty good, but the stock is getting hit now. Amazon as bad as it could probably possibly be. Their earnings were great. Their outlook, not so much. So then that started the sell-off last night because of Amazon. Then we got news kind of later in the day yesterday, midday yesterday, about these additional tariffs. Okay, some of them pretty harsh, especially on Canada. Obviously, the market didn't like that. And then the news this morning on non-farm payrolls. Now, I don't think the market reacted so much to the new number that came out for July, which we're going to discuss in a moment. But I think what they really did react on were the revisions. And we are going to talk about all of this. Non-farm payrolls, tariffs. Good day, Aladdin. Good day. Market getting down towards its low of the day here, folks. Gold should probably be back on the move higher as it was all day. VIX is moving higher. VIX, in fact, is highest level we have seen since June 23rd. All right. So this was the news this morning. 73,000 jobs were created versus the estimates of 115,000. Okay, less than expected, obviously. I wouldn't say less by a massive amount, but definitely less, which is what people actually, and this is just so counterintuitive to having a healthy employment scenario. People were hoping for a light number because then that would potentially put pressure on the Fed to lower rates. Because as we know, the one big thing, and we heard it the other day from Powell, is he is squarely focusing on the jobs market. In the jobs market, the employment market has absolutely been really strong. It is held up, and now we are seeing some cracks in the market. And it's not just from today's report. It is really this. This is what has the market a bit freaked out. Okay, not sure if you all saw, heard, whatever it might be, but the revisions to both May and June shocked the market. The revisions for both May and June were revised down by 258,000. 258,000. That is a massive revision. So when we hear that the jobs market has been great and blah, 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 not so much. The cracks are there. So there is no question, in my opinion, that if this number that came out this morning happened to be last Friday, and just the way the calendar works, the Fed meeting was this week, and the monthly jobs report always comes out on the first Friday of the month. So it just so happens that the Fed was 2 days ago, jobs today. If this number had come out last Friday, there is no question in my mind we would have seen a cut. We would have seen rates come down. Reliability of the data, Gene, I mean, it's the same reliability that we've had for 50 years of data. So whether it's good, bad, or indifferent, I mean, there are always adjustments, there are always modifications, revisions, but not this severe. Not this severe. So what I have up on the screen right here is this is the CME FedWatch tool that we follow, that I brought up here multiple times. This gives an instant, real-time pulse of what the market is trading on or expecting rates to do. Okay, so the screenshot you're looking at right here, this was just a minute before the non-farm payroll report came out this morning, which showed a 59% probability that there would be no cut in September. Hang on one second, guys. I'm just looking at this headline here about the nuclear submarines, and I guess Putin is not too happy. I don't know. We'll see. Market doesn't like it, though, obviously. So anyway, before the news came out this morning, okay, only a 41% probability of a cut in September. Okay, does everybody understand that? Sorry, everybody. I'm just responding to my broker friend in the VIX pit. Okay, so everybody's got this. Okay, now, minutes after the announcement this morning, we saw a quick shift because the number was bad, because there were these revisions. Now, all of a sudden, the immediate reaction was, oh, things aren't so great. Maybe the Fed does have to cut. So we saw the probability surge from 41 up to 55% probability that there would be a cut in September. Okay, does everybody follow this? Yeah, Bear, exactly. Bad news no longer good news. Bad news is bad news in this scenario. There's no question about it, right? Which you've heard me say this often. You've heard me use the term, be careful what you wish for. Be careful what you wish for. Everybody wishing that the job market would crack. Everybody wishing that the economy would slow down so we could get rates lower. Okay, this could be the start of some of those consequences. Now, as we currently stand, as the market has digested these non-farm payrolls and realized that, oh shit, excuse my language, the jobs market has not been as strong as advertised. Now look at this. This is as big of a shift as I have seen in this short amount of time. So now there is almost an 85% expectation probability that the Fed will cut rates in September. Does everybody understand why this shift happened from just prior to the report coming out to this morning, okay, to where we are right now? Does everybody understand that? We kind of talked about the Fed and non-farm payrolls earlier in the week when we were talking about all of the eco data that was coming out. Fair, that has happened before, but only in times of dire consequences. So the likelihood of that happening is probably not real big unless something else happens. I mean, God forbid we were going to war with Russia, we probably see an immediate rate cut. Okay, so that has happened in the past, but only literally when there's been dire consequences or, responding to something really, really bad that has happened. Okay. Now, let's talk about tariffs. I'm going to put up a link in here because, unfortunately, not on my screen, but this map that I have up here is an interactive map that I found where if you hover over it, it'll tell you the exact amount of tariffs for each country. So I just posted up a link in the chat. If you want to paste that into your browser, you can then hover over any country and see what those tariffs are. Okay, but this now gives an overall look here at where the highest tariffs are. And with the news that came out yesterday about all these additional tariffs, market didn't like it. Market did not like it, especially this one right here. Especially that one right there. Okay? It is becoming apparent. It is becoming apparent through the data that we are seeing that there is an impact. That there is an impact to you, to me, to businesses because of the tariffs. And in my opinion, it's just going to accelerate as this is kind of just funneling in through the marketplace. Okay, so I think that's something that we really need to be aware of and really something to consider for everybody. You got it, Jake. You got it. You got it. You got it. All right. Today's word of the day is jobs. So while we're doing that, I'm going to bring in a VIX chart here. Okay, here is a 3-month look. So you can see the VIX is at its highest level since, as I said, June 23rd. There definitely is some resistance here in the VIX right around the 22 area or so. But if we happen to get through there, boy, there's a lot of room. There is a lot of room for the VIX to run here. So what do we always talk about in terms of your portfolio, in terms of protection? What do we always talk about? In fact, those of you that heard me on Schwab Network this morning was preaching the exact same thing. Was preaching the exact same thing. And what is that? Bingo, Richard, bingo, bear. Buy insurance when you can afford it, not when you need it. Don't buy the insurance when your house is already on fire. Buy insurance when you can, not when you have to. Buy it when it is cheap and hope that you never have to use it. That's part of trading. That is part of being mindful. Okay, we have positions on that, as we've said, we just have them on because it was cheap to have that protection. Okay, any questions on the non-farm payroll or the tariff situation? Because if not, I'm going to go into kind of a rapid fire here for the rest of our time. Please hit that smash or hit that like button, smash that like button, whatever it is I'm trying to say there. Please do that. Would very, very, very much appreciate that. Rapid fire it is. Let's go. I'm ready. Any questions you want answered, throw them out. You want to look at a stock, a position, whatever it is, throw it out here. Let's do it, folks. If we wait a day or two, does the sell-off reverse? I mean, that's been the pattern. That has certainly been the pattern. So maybe, I don't know, maybe. Sizzle. Sounds more like sizzle. Let's see. Okay. I have no idea what this stock is. I will certainly look into it. Here is a 1-year chart. They have earnings next week. Apple is going down more with the rest of the market right now. Okay. Not knowing anything about this stock, and I'd have to look into it just based on the technicals. Sure looks nice for an entry. Sure looks nice for an entry. Okay, Marvell, Troy, are you asking because we have a position and you want to discuss what our position is? Troy? Come on, Troy, work with me here. We have a position in Marvell that we actually just made an adjustment to today. So I want to ask you, Troy, if you are just thinking about this in general, or if you are thinking about this in regards to our position. Danny, what's up? Wait, say that again, Danny. Sorry, everybody. This is Danny, who you all know. What's up? Go. See ya. Bye. Sorry about that, guys. Okay. So we have a position. We put on an iron condor in Marvell right after earnings when the stock came up to that resistance. Okay. We sold basically an at the money call spread, and we sold a downside put spread. Okay. And we collected, excuse me, $2.45. Really, really good. Really, really expensive. Okay. $5 wide on the call spread, $3 wide on the put spread. Unfortunately, we never got filled on the put spread. We put a separate order out there to buy a put spread. Unfortunately, never got filled in because the stock's down $10 from there. Would have been great. Anyway, with the stock moving down now, what we did just now today is we bought the 85.87 call spread. We paid just 20 cents to buy the 85.87 call spread. Okay, so what did that do? That adjusted our position to still have an iron condor, but now $3 wide on each end. So we have a $3 short put spread, a $3 short call spread that we net collected $2.25 on. Pretty amazing reward to risk on this. Does everybody understand the position now? Is everybody good with that? I'm hoping. Okay. Thank you, Marty. Thank you. Okay. Thomas, thank you. What opportunities do we see with XLF or banks in general? Well, banks are getting smoked today, but they have had an amazing run. Actually, they've come back a little bit. I'm looking at Goldman Sachs now is only down 2%. JP Morgan is down 2%. What's going to happen with the banks and rates? You know, it's kind of a double-edged sword, because if rates are coming down, which probably means things are the economy's slowing down and maybe things are going to get more volatile, that's actually not a horrendous thing for the big banks like JP Morgan, Goldman Sachs, Morgan Stanley, even Citi, the ones that have trading operations, because that means the trading side of their businesses are going to be pretty darn active. So if we look at XLF, that's the ETF for the financial sector, okay? Here's XLF, and we can see on today's move here, this is a big move today. It's down $1 today. That's a big move for XLF. We can see it just broke through the 50-day moving average. I personally would wait. What is this? About another $1.50 till we get down to the 200-day moving average. And if we got down there, I'd probably look to take a position in XLF. All right, we're gonna do a last call here for the for word of the day, word of the week, I guess. Last one of the week here. Just but when I'm looking over here, guys, it's not because I'm doing something else. It's because I'm looking at my screens and tickers and all that good stuff. Someone did ask about First Solar, right? Somebody asked about First Solar because that's something that I talked about this morning on Schwab Network. Yes, no, maybe. Was there a First Solar question out there? It's a great Curb Your Enthusiasm episode. Anybody here a Curb Your Enthusiasm fan? And if you are, you remember that episode? It's actually one of it's got to be a top 5 episode of all time. I am pessimistically optimistic, and I am optimistically pessimistic. Yeah, I think a lot of us kind of feel that way. Yeah, Lululemon's in a free fall. Lulu is in a free fall. Let me show you this chart here. There was some big support in that stock. Let me bring it up around 225, 230 area, and it is obviously right through that. So this is that area I was talking about right here where there was big support dating all the way back to this was August of last year. Now we're kind of in a free fall. Is it oversold? Yeah, but you know what? There's not a lot to look at support wise. I'm going to bring up, hang on one second. I'm going to bring up a 5-year chart here. So hang on one second. And let's see what it looks like on a 5-year chart. Mine only goes back 2 years. Come on. Okay, there we go. Here is, let's get this now to a 5-year chart. So there's nothing even 5 years. You know, here's a 10-year chart. You got to take us back to basically the beginning of COVID, which is really, in some ways, COVID seems like it was yesterday, and in other ways, it seems like it was a lifetime ago. That's the last time Lululemon was right here. All right, everyone. Mike Shore reposted this stream. Thanks, Mike Shore. Shot in a beer before the bar closes. Man, Steven, you are my kind of guy. Let's go. Let's go. What's your preference, Steven, if you're going to have a shot? You going straight tequila or what? Well, Steven Frystack, if you are bullish on Lulu, yeah, I would probably look for that. But I'm not sure it's time for that yet. Jose Cuervo, let's go. Gentleman Jack, okay. I can't drink the brown stuff. And I honestly, it's all because of college. Literally. It's all because of Jack Daniels in college. And I cannot drink any of the brown stuff. Now, any of the other stuff, we can talk about that another time. All right, we got a pretty pretty nicely packed wheel today. Hello, Benjamin. How you doing? All right. Let's give us a whirl here, everybody. It's our Friday wrap-up wheel. This is going to Paul August or Paul H. It is close, and it is Paul H. Paul H. By a hair, by a whisker. Anything brown, Jake. Anything brown, forget it. Forget it. Brings back really, really bad thoughts. Paul H., are you in the house? I get to use this wheel a lot next Friday. Next Friday night, I'm hosting a charity fundraiser for my foundation. So the way that we're going to do a bunch of the raffle prizes are doing the wheel. Hello, Paul. All right, I am glad you're here. Shoot me an email. We'll post it up here, prosperswag@prospertrading.com. Shoot me that email with your address and swag size. And see what happens the rest of the day here, guys. We'll see what happens here. But yeah, I'm not so sure. I'm not so sure. The market is was looking to maybe recover a bit, and then this news came out about Russia, and I'm not sure based on that news that anybody is going to want to be long into the weekend. All right, everybody. Appreciate all of you. Have a fantastic weekend, and we will see you on Monday.